In this video, we'll understand the Taxation Law Second Amendment Bill 2016, which is otherwise commonly known as Income Tax Amendment Bill. To understand this bill, I'll divide this presentation into three formats. The first one is self-declaration of undisclosed income. They are kind of people who are willingly saying, look, here is some money that I have and this is how I've earned. I know I've hidden this income, there you go, I'm coming clean about it. The second one is disclosure of unexplainable income. They are kind of people who are disclosing all their income, but somehow they can't explain or they are not able to produce any proof about their hidden income. And the third one is income found during search of taxpayer's asset. Here the income tax authorities may initiate an investigation and search of assets of a taxpayer on the suspicion of possessing undisclosed income. We can also call this method as a reactive measure from the government. So these are the three formats in which we will understand the Income Tax Amendment Bill 2016. The first format says self-declaration of undisclosed income. Now I have told you what this stands for. So here what happens is when the taxpayers, that is you and I, when we declare our undisclosed income by depositing in banks, post offices or Reserve Bank of India before the notified date, in such cases there are taxes and penalties on our undisclosed income, and they look something like this. There's going to be a 30% tax on undisclosed income. Then there's going to be a cess, which is 33% of the already 30% taxed undisclosed income. And finally, there will be a penalty which is 10% on the entire undisclosed income. So if I have to say all of this by giving you an example, suppose you earn 10,000 rupees extra in a month by some other means apart from your regular income or salary. So the calculation is going to be in the following manner. First, there will be 30% tax on your 10,000 rupees. That will be 3,000 rupees. And then you'll have a cess, which I will tell you what that is in a while. So the cess, which is going to be of 33%, will be applied on your 3,000, not 10,000, which is going to be 990 rupees. And finally, there will be a penalty which is 10% on the entire undisclosed income. This is 10% on 10,000, which is 1,000 rupees. Now add everything, that is 3,000 plus 990 plus 1,000, which will be 4,990 rupees. Almost 50% that will be taken away by the government. Now let me get back to the cess that I spoke about. The cess will be known as the Pradhan Mantri Garib Kalyan cess. That will be used for welfare of economically weaker sections. Now there's another condition that the government has imposed. After taking away the tax, the remaining amount, which is 5,010 rupees, 25% of this amount has to be deposited into the Pradhan Mantri Garib Kalyan scheme, the scheme that we just spoke about. And this deposit will not earn you any interest. This deposit may be withdrawn only after 4 years from the date of deposit. So this is the tax and penalty system for people who self-declare their undisclosed income. Now let's go to the second format, which is disclosure of unexplainable income. Currently, there is already a tax levied on taxpayers who are not able to explain any of their income. But then in the new amendment bill, there has been some proposed changes, and they are: so presently there is 30% tax on unexplained income, and the proposed change is 60%. Currently, there is no penalty involved, but then it has been proposed that there should be 10% penalty on the unexplained income. And finally, there is a surcharge involved. So currently the surcharge is anywhere between 2% to 15% on tax payable. But the new recommendation says increase it to 25%. Now let's take all the proposed changes in tax and put it in an example to understand it better. Suppose you earn 10,000 rupees extra in a month apart from your regular income or salary. So the calculation is going to be in the following manner. First, there will be 60% tax on your 10,000 rupees. That will be 6,000 rupees. Then you'll have a penalty which is 10% on already taxed money. That is 10% on 6,000, which is going to be 600 rupees. And finally, there will be a surcharge which is 25% on the entire unexplained income. That is 25% on 10,000, which is 2,500 rupees. Now add everything, that is 6,000 plus 600 plus 2,500, which will be 9,100 rupees. Almost 91% of your unexplained income will be taken away by the government. And I think the statement from the government is pretty clear. If you cannot explain how you got the money, then you're better off losing it. Anyways, now let's go to the last and the third format, which is income found during search of taxpayers' assets. I have told you that in this case, income tax authorities may initiate an investigation and search of assets of a taxpayer on the suspicion of possessing undisclosed income. Basically, this is a reactive measure from the government. So in this case, there is already a tax levied, which is 30% of the undisclosed income. Now, there are two cases in this category. The first case says the current penalty is 10% of the undisclosed income if the taxpayer admits holding undisclosed income, and the proposed penalty to that is 30%. Now in the second case, where the taxpayer does not admit holding undisclosed income, then the current penalty says take away 20% of the undisclosed income, but the proposed penalty is 60%. Now let's put it in an example and understand it better. First of all, there's going to be a 30% tax on 10,000 rupees, which is 3,000 rupees. This is going to be permanent throughout. Then in the first case, where the taxpayer admits holding the money, will have to pay 30% again, which is 3,000 rupees again. And in the second case, where the taxpayer does not admit holding the money, it is going to be 60% of 10,000 rupees, which is 6,000 rupees. And I think you can add up the amount and see how much the government is going to take. One of the reasons that the government has come up with such complex tax structure is because in a country like India, where there is no fixed price for commodities, price is dictated by market demand and other factors, and it keeps fluctuating. Therefore, it gets very difficult to keep a track of consumption and its value. So to deal with this problem, government says you sell and earn how much ever you want to. We are going to take away this much of your income in the form of tax. And that forms the underlying statement behind Income Tax Amendment Bill 2016. If you want to see more of such educational content, make sure you're subscribed. By doing so, you'll get an alert when my next video comes. Thanks for watching, and I'll see you in the next one.